Welcome to Zone Trade's video on risk management. One of the biggest benefits of trading using supply and demand is that you have a defined stop. You always know where to put your stop, and it's not just an arbitrary number. For example, let's say you're only willing to risk $200, so you put your stop $200 before your entry. When you have a defined supply zone or demand zone, if it breaks the top of the supply zone, then you no longer want to be in that trade. You know that zone didn't hold, so that trade's likely to go against you. Same thing with a demand zone. If it breaks the bottom of a demand zone, then you don't want to be in that trade anymore. That zone didn't hold. Okay, so what you're going to do is anytime you make a short trade, you're going to place your stop just above the supply zone. And when you make a long trade, your stop is going to be just below the demand zone. And then your risk is going to be the difference between your entry price and your stop. All of the trade recommendations that you get from the Zone Trade site are designed with a reward to risk of a minimum of 3 to 1 based on our first target. Okay, with the reward to risk of 3 to 1, your break even less commissions is a 25% win rate. So you only have to be right 25% of the time to break even. You're going to make money at 50%, 60%. Our goal is to be at 70% or higher, but obviously that can't be guaranteed. Okay, and then you never want to risk more than 2% of your portfolio on any one trade. Now I have a larger account, so I only risk 0.5% of my portfolio on any one trade. Okay, if you have a smaller account, maybe a $5,000 account or a $10,000 account, then you might be willing to risk a little bit more, up to 2%. But you never want to go with more than 2% of your portfolio on any one trade. This is one of the most important aspects to your trading. You have to have proper risk management. You want to risk the same amount as close as possible anyway on each trade. One of the biggest risks that you run into is you may see a trade that, man, this trade just really looks good. I'm going to put more on this one. I'm going to put 5% on this one. And then that trade goes against you. You can obviously see where this path is going to lead you. So in your trading plan, you're going to risk the same amount on each trade, never more than 2% of your portfolio. And again, I recommend 0.5% to 1%. If you're trading a $100,000 account, 0.5% is $500 risk per trade. Okay, our trades are also structured where the amount that you invest is your risk. Okay, so if you're risking $500 per trade, and we put out a buy recommendation at $2.50, that's $250 per contract. So you're only going to buy 2 contracts. Okay, if we put out a trade recommendation at 50 cents per contract, then you're going to buy 10 contracts. This video is a short and sweet video, but it's important. You must pay attention to your risk management.